All right. Let's get started, guys. Thank you for everybody joining us. I want to get started here promptly. Glad everybody can make it. Yep. All right. Looks like everyone's a go. Can everybody see my screen? I know you can't type anything. There is a questions box. Anyway, let's just get going here. All right. This is webinar on how to build wealth at trading without risking all your money. It's a great program and a great thing that we're going to be doing here. And I think you'll really enjoy the information I'm getting ready to share with you, but let's not waste any time here. You can kind of read down my list of accolades here if you would like, but I've been trading a long time in the markets. I mean, a long time, over 20 years. I've owned my business, over 11, an education company. And I'm a former institutional trader. I've mentored over 860 individuals. So anyway, you can kind of read down through that. That doesn't matter who I am, other than the fact that I've been trading a long, long time, and I'm connected with a lot of traders. All right, so let me give you a couple of useless facts about yourself here. If you're attending this webinar right now, there's an 85% chance that you're a male, 15% chance that you're a female. And if you are a female, you're highly educated, and you are probably in the higher management of your company, or you own the business. If you are male, you are middle to upper management and also highly educated, and you're very analytical in your decision making. You have an engineer mindset, and interestingly enough, that if you are a student of ours, if you have gone through our program, you have a pretty likely chance of being a lefty, a southpaw, and definitely an engineer. And some of you, a lot of you tend to be airline pilots, which is very interesting. So again, for you who are analytical in your thinking, you like useless facts, there you go. Anyway, I'm going to be sharing with you a gift at the end of this webinar. Stay until the end and I'll give it to you. What it is I'm going to be showing you my personal charts on swing trading. And I have 3 setups that I use, and I want to show those setups to you as my gift to you for hanging out with me on the webinar. And it's only for you if you stay until the end, and it's certainly worth staying for. Anyway, that was a quick glimpse of what I'm going to be sharing with you. So anyway, you're going to find this information more beneficial if you focus on it and shut down everything. Shut down Facebook, Twitter, shut down any other distractions. Turn your cell phone, put it in your pocket or your purse. Just get rid of it for just a moment of time here, because if I don't have your attention, all this time will just be a waste of your time, and you won't be helped, okay? But listen, things I'm going to be sharing with you here, investors are encouraged to seek professional financial advice from a licensed financial advisor, which we are not licensed advisors, okay? I can't tell you what to buy and what not to buy. I can educate you on what you should be looking at to buy, but I can't tell you what to buy, okay? So before doing any investing or trading, financial advisor is who you need to be looking at. Trading is risky and is not a get-rich-quick opportunity. So are we all on the same page? Are we good with that? Okay, good. Let's go. You and not your account. So I have a really important question to ask you. Now, this question forces you to look at your trading objectively, okay? Without any bias. So you ready for the question? The question is this. If you were to look at your trading account as a chart out your trading account, would you be better served to short it or to go long? In other words, what trend would your trading account be in over the long haul? Say the last 6 months, last 3 months, even 5 years or longer. Just look at it and say, what trend is it in? So in regards to your account, would it make more sense for you to be long or short? Let that question sink in. In my 20 years of trading, okay, I discovered brokers make you broker. Buying hope is not a strategy, and capital preservation is greater than profit seeking. Okay, so a huge problem with most of us um, is that in a bull market, profits come and go. Okay, so when we're in this market, the markets have ebb and flows. Money comes in and goes out. But what happens if we're a buy and we're holding, we don't have a strategy to lock in profits. That is an intrinsic problem with traders today. They just ride the market ups and downs, hoping at the end of the year that they're going to be higher in profits than lower, okay? Another massive problem is that in our IRAs, our 401ks, we just keep buying even when the market drops. That's a bad thing. We keep buying with no discretion. That's bad. The undereducated individuals out there, okay, we're talking traders and investors, simply hold through all these market environments with no plan except to buy and pray. When it comes to brokers, you hear things like, hey, you just need to buy and hold for the long term. The market always comes back. Stay the course. If you get out now, how will you know when to get back in? Just keep buying during the market dips. You're getting better prices, great prices. I mean, we hear these things all the time, but here's a chart. Okay, let's talk about facts here. And this is, as a pragmatic thinker, as somebody who's objective in my analysis as a trader, I'm going to start I'm going to dump a bunch of facts at you so you can make your own decisions on the markets. Okay, and I think this will be helpful. What you're looking at here is the S&P 500 weekly chart. Now, from 2000, look at the chart, from 2000 to 2013. So we're talking right here. So from 2013, right there. See this red line coming across? In a full 13 years, the buy and hope crowd out there, that money did absolutely nothing. Do you guys see that? I got all these monitors coming across, but I want to make sure you can see my arrow here. 13 years, nothing happened. I mean, it gets worse. Counting inflation, you actually lost money. Okay? Counting inflation, you lost money. As you can see from the chart, it's a decade, more than a decade of lost opportunity. That is bad. I mean, today we're lucky to be at a marginally higher area than we were in 2000. Think about that for a second. We're 2018 right now, 2019. I mean, listen, that's a whopping 18 years plus, okay, of missed opportunities, of virtually breaking even. That's not good. Any educated, pragmatic thinker should ask themselves this: why sit through the dips that always erode all of our profits? I mean, there has to be a better solution. Here's another chart. Look at this. This is equity markets valuation. Okay, this is the valuation of the markets, net percent. Say equities are overvalued. Okay, so this is where you have big time fund managers, okay, saying that the markets are overvalued. And here are the years down below. Do you see this? Now, look at this. In 2000, the market dropped, right? We dropped to 2003, so we were overvalued there for a while. We dropped, and we had some other drops. Okay, but here's the big one. Look how we're overvalued here. 2008, you see this? We went into overvalue mode here too. So in 2001, 2002 overvalued, 2004 overvalued at the top of 2007, right before the market crashed. Remember that? 2010, we touched it. But since 2013 on, we have been overvalued, and we are at the highest level right now of being overvalued. All right. So And this is all from Merrill Lynch. Do you see this? That's where we get this. Valuation has been a key concern as of late. We've been in a bull market 9 years, guys. 9 years is a long time. And not to get too geeky, but the S&P 500 now trades at a 22.38 times forward earnings. That's 12-month period ahead, okay? Which marks the highest level since the financial crash of 2007, 2008. That's where we're at today in the markets. So what does it mean? It means that all the money managers, all the brokers out there are still buying overvalued assets, hoping that the markets will just continue to rise. And what goes up must come, fill in the blank. Oh, tech bubble crash. Say that 10 times quickly. March 2000 to October 2002. Remember that, guys? Back in the late 90s, when money managers were still shoveling asset dollars into overvalued tech companies, I mean, that was happening. I remember this, like, because I had just got started in 98, 97, 98, started trading regularly in the markets. And I had a mentor who was a fundamental mentor, and he was explaining to me that the markets are all the stock, these tech stocks. He explained to me through looking at reports that they were all overvalued, and he couldn't believe people were still shoveling money into those overvalued tech stocks. And so I remember that vividly. But the S&P, that shortly after, when the bubble popped, the S&P 500 lost 49.1%, nearly 50%, and it happened in 30 months. 30 months, almost half your money gone. It's like burning it in your backyard. That's like taking half of all the money that you've accrued, that you have amassed, that you have put together, and all your years of working, taking half of it and burning it in your backyard. Oh man, that's just gut wrenching. The buy and hope people just got smashed during that time. Okay, how about the financial crash? That was October 2007 to March 2009. We all remember this train wreck. And this was just over 10 years ago that this happened. The S&P 500 lost 56.4%, and it only did that in a short 17 months time frame. In other words, in a year and a half, you saw nearly 60% of all of your profits erode away. And it happened very quickly, went up in flames. You guys remember that? I know that you do. So the question is, what will the next drop be like? What will it be like? When might it happen? So this is a current chart here, okay? Current chart. Let's just take a look at this. But this market, bull runs in this market have historically lasted about 5 years. If you look here, 1995 went up to 2000. Okay, that's 5 years. 95, 2000, 5 years. And then in 2003, 2008, there's another 5 years. So 5 years here, 5 years here. Look at this. We are 9 years extended in this bull market. So the market's just like a rubber band. The more you stretch it, the more and the faster it will snap back. It's not if we're going to drop again. It's when. The markets always go up and they always go down. So it's always relative. So the market will retrace, and it's projected to do so in a significant manner, okay? So a healthy 50% Fibonacci retracement, just a 50% retracement from the 2009 lows, would put us in the 2015 lows. So around 2015, right here. Do you see all this area right there? That would be a nice 50% retracement right there into that area. But to put that into perspective, okay, this 50% pullback that means the Dow would drop down to about 16,500, which in other words is a 1,000-point drop. Savvy traders will make a killing in that environment. However, the buy and hope individuals out there are going to get slaughtered. And anyone that's looking to retire at that point, just think, the tech bubble dropped at 49%. We dropped at almost 60% on the financial. So now we're way up. And if the market drops again, let's say it's another 50%, maybe 60, maybe 70, I don't know, whatever the pullback is, can you afford to have that money erode away? The answer is no, we can't. So what do we do? That's the big question. Oh, and look at this statistic. This is from CNBC, okay, in 2017. 66% of all active managers failed to top the S&P 500 in 2016. It actually got worse. Performance actually was worse than that on longer time frames, with more than 90% of all these brokers or money managers missing benchmarks over a 15-year period. 90%, 9 out of 10 could not keep up with the S&P market in 15 years. That is insane. I think 2017, I couldn't find that number, but I saw or read somewhere it was 75% could not beat the markets. Many people have this false belief that professional investors are the safe way to go. So they give these managers, these money managers, all their hard-earned capital. The question is, how much sense does that make? Most brokers have you buy mutual funds. Oh, man. I mean, do you currently own any mutual funds? Maybe if you have a 401k. Mutual funds have built-in expenses, sometimes more than 5% combined. You don't see those expenses. They're just built in. That's a problem. In other words, it's simply impossible to beat the broad markets with mutual funds due to these added fees. So it doesn't surprise me that 75% or 66% in this case of money managers can't beat the S&P because they're buying products which are mutual funds and they have built-in fees of 5%. How can you possibly beat the markets when you're at a 5% deficit from the beginning? So the rule of thumb is this, write this down, never, ever, ever be in mutual funds. Don't have those in your portfolio if you can keep from having them. It is an undereducated security to have in your portfolio, okay? Each one, just know this, that each mutual fund is simply a product that brokers are trying to sell you, okay? So it's just like the Vanguard. You go to Vanguard and think about all the Vanguard funds that they have, and you could just go to Merrill Lynch and all the funds that they have, or Prudential and all the funds that they have. They have a ton of products. They call them mutual funds. There's built-in fees of 5% plus usually on those, and you're always going to be lagging the markets. And if the market drops, not only does it drop the same amount that the market does, add 5% fee to that as a drop, and it's just horrible, okay? So brokers, don't get me started. But anyway, brokers are told by their brokerage firms, you find the money and we'll do the rest. I mean, all they are glorified salespeople. They just want their brokers to obtain assets, and by selling, so they can sell their products to you, okay, which are mutual funds. But believe it or not, most money managers are not taught to manage money. They're not taught to do it. They're not taught technical analysis. They're not taught fundamental analysis. They simply want you to sink your money into their mutual funds that are packed full of these overvalued companies, okay? But they have falling revenues, deteriorating margins, negative cash flows. They're just bad companies to be in, but nonetheless, you hold them. The firms simply don't care. As long as they get your assets under their management, that they are happy. You see, brokers have been trained to sell their products, nothing else. They're glorified salespeople. Just keep that in mind. There's the reality behind it. The brokers we have trained personally, okay? Yes, brokers do come to us, and we do train them. And it's usually the brokers that do come to us are usually in the higher management level. And anyway, that's just usually it's those. I never or seldom get a lower level or mid-level brokers that come through our system. It's always the bigger guys. I mean, most of the brokers that come with us have large books, anywhere between $10 million to $250 million in assets. But I always ask the brokers, why do they come to us for training? And I can sum it up with a couple questions or answers that have come to me. One of them said that they were done peddling the lie. And I was like, well, what does that mean? He says that buy and hold is a good strategy, because he lived through the technology bubble pop. He lived through the financial pop, and he was done trying to give excuses to his clientele that buy and hold was a good strategy, because he saw far too many of his friends, his clients, get hurt. Fortunately for them, to this day, if they were still in the markets, it has come back. But it's for those that had to retire late, they just got hurt badly. But anyway, I had another broker that summed it up like this. He says, well, because they didn't teach us how to trade, and we want to learn how to properly manage our clients' money and our personal money. Think about that. These are brokers coming so they can manage their personal assets, because a lot of times their hands are tied. They can't manage the assets due to their brokerage's policies. But some clients that they can, but they want to learn technical analysis, fundamental analysis to help them do that. I applaud that. So that's what they do. So in short, don't put your trust in brokers or mutual funds. I think we're clear there. I'm going to give you guys 3 secrets that will help you. But these 3 secrets are crucially important to building wealth as a trader without risking all your money. Be ready to take some great notes here. Number 1, how successful traders run their trading implementations like a conventional business. Secret number 2, there's no substitute for great trading, education, but true trading excellence is only found in the thoughtful assimilation of that education. And number 3, how autodidacticism is the lethal killer to great traders. Let's go through these one at a time. Secret number 1, how successful traders run their trading business implementations like a conventional business. This is big, guys. Big. If you do this well, you have to do it well. You're going to get just stepped on. But here it is, step 1, 2, 3, 4, and 5. You can read it. Just read down it. All this is, these are steps to a conventional business. These 9 important steps are used in all startup businesses to help them become successful, okay? So these are universal truths in the business world, okay? I'm going to draw a direct parallel with most of these in trading and how they will help you. This is me, big trading club. I run a trading club, 500 plus members, been doing that for several years. Most of the members, though, in the club are not full-time traders, nor do they make consistent profits, okay? I would venture to guess that my trading club matches the makeup of the traditional trading market as a whole here in the United States, okay? So the studies show that 89% of traders don't make money, 11% make consistent profits trading, retail traders that is. I would imagine about 11% of my group, maybe 15% are making consistent profits, and probably full-time traders or full-time traders. So it's just, yeah. So one of these things, well, those who are full-time traders in my group, okay, who are making consistent profits, all right, have 2 things in common. They all have 2 things in common, but one of these things that they have in common is that they treat their trading just like a business. Let's talk how. Okay, step number 1, research and education. In business, research and education are the foundational components for success. Okay. The same holds true in trading. For the most part, most traders, you engineer types, everyone on this webinar, you're probably ferocious researchers yourself, I would guess. So this is seldom a problem with most traders, okay? Those who are the best at researching also they also need to have acquired the best education. Those individuals win. They always win. So research does not equal education. This is huge, okay? Let me give you a big warning, guys. Many traders confuse their research and information gathering with education. There's a big difference between the two. And it's shocking how many people get this wrong. To think that research and your education are the same is a mistake. These two things are very different. You see, research equals data acquisition, okay? Research equals data acquisition. Education equals learn systematic instruction. Education equals learn systematic instruction. Do you guys see the difference here? So research gives us info, education gives us know-how. Are you following me? In business, you need to get both of these right. So you already probably do a good job acquiring info. I'm making that assumption because if you're anything like me, we're geeks when it comes to information. But you need to be equally as good at acquiring formal education too. So does that make sense? Step number 2, plan your finances. You can't start a business without funding. You have to have that. In trading, you also need cash. Like for example, in the United States here, you need to have at least $25,000 of cash sitting in your trading account to be able to allow your broker to allow you to day trade. Okay, you need 25,000. So in swing trading, you need 3, 4, 5, 6,000 at a minimum just to get started on day or swing trading. Swing trading just means you hold a stock for a couple of days to a couple of weeks. You're more active in trading, but not doing it multiple times throughout the day. You're holding them for a week or two. But the more capital you have, the more money you'll make, because everything is based off of percentages. Every dollar to me as an employee, my employees have to be making me money, not losing me money. Does that make sense? You follow me? So step 3, 4, and 5, calculate expenses, calculate risk, calculate profitability. These are arguably the most important parts to business. If you get expenses, risk, and your potential profitability wrong, you're dead in the water right from the beginning. In trading, each trade has to be carefully measured. The reward to risk ratio is key. Get this wrong and you're sunk. Every trade that you make, that we make, must have the odds heavily stacked in our favor. Every trade must have a precise measured risk. Every trade must have a greater reward than we are risking. Our trades all combined should be making us a lot of money. Step number 6, make a plan. There's no successful business in the world that didn't first start with and continue to live by a business plan, a business plan. Okay, what I'm about to share with you is a significant failure for most traders. How? Most traders do not have a trading plan. Why? I can tell you. We've taught a lot of people because they're not disciplined. They're too lazy. They don't know how. They're not sure what to put in their trading plan. They don't know how it all works. They don't understand the value of a written plan. Trading plan. The best traders have and they use them well, a well thought out trading plan. So why? Because it's objectified. It's methods. These objectified methods can be measured. And what gets measured gets improved. Are you following me? In other words, a plan allows you to map out your systematic approach so that you can identify what works and what doesn't. A good trading plan makes some assumptions. To have a successful trading plan, it assumes that number 1, you have successfully added all the components a plan needs. Okay, and 2, trading rules are rock solid, meaning that they've been well tested, and or they're simply just not added to your plan. Okay. Step 7, step 8, choose a business structure, choose your accounting system. You want to write down what I'm about to say, okay? But first, I'm not an attorney. I'm not a tax professional. You have to consult an attorney and a tax professional. Okay. So with that understanding, I'm going to share with you, based on what an attorney has told me, what the rule of thumb is. Here's the rule of thumb. You want to probably look into creating a company, but it needs to be one that's outside of trading. Okay. And you want to set up your brokerage account under the name of that entity. There's more. I was advised not to have the words trading or investing or financial added or anything like that added to my company name. So why is this the rule of thumb? In the United States here, every business has the right to also make money via investing. You can invest in real estate, other businesses, and the stock market. We can use that to our benefit. So the idea is to start a business that makes money outside of trading, but you want to do all your trading through that entity. Does that make sense? You guys following me? So for example, I started a business, whatever it was called. Back in the day, I'd since changed it because I named it wrong. I named it my name with the word trading in it, LLC. And so I changed it, and now I have another trading business, and I do not have the word trading or investing or anything in it. And I use the business to help me do other business ventures, management outside of investing, but I can run my trading account through that business. So I put it to that business's name. So that's, anyway, consult your attorney on that. Okay. All right. Step number 9, meticulously measure results. Last but not least, the best traders meticulously measure their trading results. This is a must. You need to find a robust trading system. That's the secret. Find a system that calculates all your major trade metrics. Okay, you have to find that. Not just the data of your trading. Any broker can give you a statement that gives you all your trading information. I'm talking about something much different and more telling. You need to be able to measure things such as your win-loss ratio, your risk to reward risk ratio, and so on. You need to be able to graph to see your growth or decline, that trajectory. That's what we're looking for, to know whether you're improving or devolving in your skill set. Very, very important that you have that. But the best trade log systems, okay, or platforms out there are those that assist in your development as a trader. It needs to be something easy for you to analyze. This is critical. Critical. So run your trading like a business. All right. Are we all on the same page so far? Are we? You can nod your head. Figure number 2, there's no substitute for great trading education. But true trading excellence is only found in the thoughtful assimilation of education. What I'm going to share with you should rock you, okay? But most of our students are highly educated individuals. They're very bright individuals, okay? And people, you guys on this call, this webinar are, chances are really good that you're educated. You're educated and sharp, bright individuals. Okay. Unfortunately, for some of you listening right now, I personally know individuals who are intellectually considered to be at genius levels. However, they could not trade successfully. How could you be almost at a genius level and fail to be able to trade successfully? Why? Here it is. Most of these traders, or these highly intelligent individuals, made the mistake of merely becoming a human aggregate of information, of trading data. They assumed that the answer to trading excellence was just more info. And they were dead wrong. The notion has cost many very bright, very smart traders to lose a lot of money in the markets. They have paid a lot of market tuition, if you know what I mean. The right education assimilated. It's all about the assimilation of that data. That's the secret, simulation of the data. Trading is less about learning more about trading and more about learning the right way to trade. Learning the right way to trade only becomes it proves out to be the easy way of trading. Learning to trade the right way only comes by assimilating the right trading education together. Trading is all about understanding the correct methodology that only comes via the correct information that has been properly assimilated. Does that make sense? Are you guys following what I'm trying to say there? For example, you could know everything that there is to know about physics, but without precise, well-assimilated education, you wouldn't know how to fly a plane. Maybe that drives the point home. Maybe that does. Let's move on. Our last secret. And for those that stay until the end, I'm going to give you a nice gift. Share it with you. Trading platform. But how autodidacticism is a lethal killer to great traders. That's a new word for most of us, I think. It was to me. That autodidacticism means self-education, self-learning, self-teaching is education without the guidance of masters. So that's autodidacticism. So autodidacticism never works in trading. Never. Never forget this important fact. Believe me, I really thought I could teach myself how to trade. After all, I felt like I was smart. I was a smart guy. I could figure it out and bright. The internet was full of information. My library full of trading books that delivered me some great wisdom, ton of information. I mean, surely, I could do this solo. My confidence gave me just a false belief that I could do it myself. Unfortunately, I learned the hard way. I lost 2 accounts. My first 2 accounts, I burnt my backyard. Why? Because of self-inflicted autodidacticism. All the information that I've gathered just got jumbled together. I had so much information coming in, I didn't know which way was up. I mean, nothing lined up anymore. System, style, methods, just all piled up on each other. And I eventually imploded twice. And this led me to be nothing more than a proverbial gambler in the markets. But I was in the stock market doing the same thing. I lost 2 accounts because of autodidacticism. Self-learning can only get you so far. That's where people miss it. So self-learning simply doesn't work within the complexities of trading. Just like learning to fly a plane. No one develops a professional level alone. Think about that. No one develops to a professional level alone. Try to think of one person in sports, one person in golfing, one person in basketball, one person in football, one person riding a bike or a motorcycle. One person that was the best brain surgeon in the world. Think about any professional that has risen to the top of their profession. They didn't, and try to find somebody that did it on their own. You can't. It's impossible. But so many of us try to do that very thing in the markets. I wish there was another viable answer that we could do this on our own. I do wish autodidacticism worked in trading. I do. I wish I didn't have to invest in a mentor. I actually had 2 mentors. One, I was fortunate enough to get free. The other one cost me a lot of money. So I have 2 mentors. I've been trading 20 years in the markets. I personally know literally thousands of traders, okay? Many of them are full traders today. Remember earlier when I was saying that there are two common threads amongst all full-time traders, and I only gave you one of them, treating your trading like a business. Well, there's another one. And the second one is kind of shocking, but it's this. Every full-time trader that I know, okay, all have and had another trader help him or her. They all have been coached. They all have been mentored. All of them, 100% of them, had another highly skilled trader help them get to where they are today. 100% of them. Think about that. Let that sink in for a second. They simply could not be where they are today as full-time traders without that help. Sometimes this concept of needing guidance from a coach or mentor is lost on people. Do not let that be lost on you. But just think of it like this. Would you fly a plane without first great education and ground school and a great flight instructor to help you fly? Like one thing I do know in the police world, I'm friends with police officers, and they go through a lot of training. They go through the academy, but then they have to do a lot of hours with their FTO, field training officer, where they're with somebody that's been on the streets a long time, and they go with them because it's life and death out there on the streets. And so the same thing in trading. That you need a well-guided. You have to have great education, and you have to be well-guided, and it has to be by somebody that's highly skilled. So how do you find support? Here's some things. You want to find somebody who's actively trading, very, very actively trading, and preferably on a daily basis. Find someone who is making money in the markets, that's increasing their account size. And then find one who's willing to openly share their knowledge with you and hold you accountable and keep you disciplined and to run you through your development. So you got to find someone that's active, find someone that's making money, and somebody's willing to train you. That's what you have to do. Okay, write those down. Someone that's actively trading, someone that's increasing their account size, and somebody who's willing to train you. But the bottom line is this: communication with your supportive coach, your mentor, is critically important. And when you find one of these guys or gals, you've found a very good thing. All right, I talked about this long enough, but I think you guys are following me, right? Let's talk money. Some people get squirmy talking about money, okay? Hey, we're traders. Bottom line is you're going to have to learn to talk about money, because that's just part of the game, okay? But some people have a bad perception of money, and I want to talk about that for a second. They believe that money is inherently bad. And maybe some of that comes from the scripture that says that the love of money is the root of all evil. But the scripture says that the love of money is the root of all evil. The love of money, okay? Money itself is not inherently bad or evil at all. Okay, it's actually a good thing. Money is actually a good thing. It's a tool of exchange. Savvy people spend money now to get something bigger in return later. Money is a tool for exchange. So let's talk about money for a second. Put your money to work. Always be thinking about your dollars like employees. Your employees have to be making money, not losing your money. It's very important. But look at this, 401k, IRA. If you go from 1996 through 2010, I couldn't find one that went to 2018, 2019, but you have that. You're talking about an average annual amount of 11.6% you have made, okay, in those accounts. 11.6 annually. 11.6 annually. So 11.6 divided by 12 months. Yeah. So you're making 0.97% a month. That's it. You're not even making 1% a month. Are you kidding me? As we discussed earlier, buy and hope is not a viable strategy. especially when you're sitting through major meltdowns like the technology bubble or the financial crash, okay? Retirement accounts are not inherently safe. Do not ever make that mistake to think so. Check this out. Trading a 5% average monthly goal is a good goal to have, okay? This is goals that we strive for, and 5% average monthly goals. I mean, that puts you at 60% a year, and that's not even with compounding added to that. I mean, seriously, where else can you get those returns? But here's a real money example. Let's say you had 1,000 shares making 10 cents a day. That's all. 1,000 shares making 10 cents a day. It's $100 each day coming in. So let's talk about what that is in reality. If you have $100 a day, there's 20 trading days on average in a month, okay? That means each month you're making $2,000. So you have 1,000 shares making 10 cents a day. If you're doing that on average, you're making $2,000 monthly. So that means annually you're making $24,000. So would you like to make an extra $24,000 annually? Yes, that would be good. Money coming in is better than money going out. Now, I don't want to pass over how great this really is too quickly. Really, what would an extra $2,000 per month look like for you? Would you pay down your mortgage, pay off some debts, make car payments? Would you buy some new toys, new vacation homes? What would you do? Would you fund a vacation or two each year? I don't know. So, but could you use an extra $24,000 at the end of the year? And again, that's capturing 10,000 shares, only capturing 10 cents per day on average. Let's double it. Let's go to 1,000 shares making 20 cents a day. That's $200 each day in the markets, okay? There's 20 trading days in a month. So if you're making $200 a day for 20 trading days, you're making $4,000 monthly. In other words, you're making $48,000 annually. Would you like to make an extra $4,000 a month? Could you use that? If your account grew, okay, if your income for the year grew by $48,000 annually, I mean, what would you do with that money? Would you pay off your home? Would you become debt-free? Would you buy new vehicles? Perhaps buy one with cash? I don't know. How would you use the extra $48,000 per year? What would you do? I mean, for a lot of people, this type of increase is life-changing. And again, that's just 1,000 shares each day, capturing an average of 20 cents per day. That's it. So here's another real money example. Let's say we do not just one trade, we do 3 trades at 1,000 shares each, and we make just 25 cents, okay, off of each one of these, okay? 3 trades, 1,000 shares, 25 cents. That's $750 a day, okay? $250 a day. I have a typo on that. So 750 times 20 equals, that's 15,000. So I don't know why it says 510. Maybe I took out taxes. That might have been taxes I took out of that to show on another, yeah. But anyway, it's $15,000 each month. That's $180,000 annually. Does $180,000 per year added to what you're making now sound good to you? So what would an extra $15,000 a month look like for you? That's life-changing for just about all people. All your financial needs should be met by this time. Your church that you belong to, if you do, or nonprofit, will be blessed big time. But chances are you won't need a job anymore if you have one, and your only job is going to be trading. And if you have internet access, you're going to be able to do your job. But you see how $750 each day can drastically change your life, right? And this is just capturing 3 trades each day, capturing 25 cents on each of those. Pretty cool. All right, so listen, we've been on this just under an hour. Let's wrap this up. we're nearing the end of this. I'm getting ready to give you guys a gift of showing you my swing trading charts, all three things, some cool things I'll share with you on that. But listen, I've shared a ton of information with you. It's a kind of feeling like you drink out of a fire hose, but you know that autodidacticism is not going to save you. You need my guidance. You need my support, ongoing help. You need a system. You need a plan. You need information, but you need the right information, because out there grabbing just information alone, like on this webinar, information alone will not save you. It will not do it. You need our assistance to reach your full potential in the life markets. It's going to give you the ability to build wealth at trading without losing all your money. So, question for you. May I have your permission to share with you what we're offering traders to help them? I don't want to share it if you do not want it. So type in the questions box right now. And I see your questions coming through. So anyway, type in yes. I see yeses already. Thank you. Thank you. Okay. You're going to want to hear what I'm going to share with you, because it's going to give you everything you need to build wealth at trading without putting all your money at risk. For those that don't want to hear it, you can peel off now. That's okay. But let's share it with you. It's Grok Trade Mentorship. But thank you. So let's get on here. Our goal is to make trading rock stars out of the average educated trader out there. That's what we're trying to do. And we do this developing traders who are better equipped, they're more educated, and they're just more successful than the other traders, developing traders out there today, okay? We want our students to do better, to trade with their eyes open, to develop quicker, and to be more successful in a faster rate. We accomplish this through our mentoring program. We call it the 301 mentorship. We believe, and for good reason, that we have and deliver the best educational mentorship guided instruction out there today. So most of us agree that there is a lot of great information out there. And there's a lot of information that can be downloaded from the internet. But I want you to understand that you cannot download thoughtful mentoring. The 301 mentorship will teach you how to find big gainer stocks. It will teach you when to get into your trades, and it will teach you when to get out of your trades. It will teach you how to stay with your winning trades and how to cut your losers short. It will help you identify explosive setups that traders never see. They leave money on the charts, their money on the table, because they do not see the money in the charts. Mentoring is everything you need as a trader. The Grok Trade trading curriculum is truly second to none, and it's the pinnacle of the best assimilated trading information that's out there today. It's been developed by some of the best and brightest traders in the industry. It's been fine-tuned for over 10 years. Our curriculum and the method that we have to teach people is second to none. The mentorship gives you everything you need to trade just about any security. I mean, stocks, ETFs, commodities, bonds, futures, or currency. If it has a chart, you'll know how to precisely trade that, okay? And you'll be able to do so with great confidence. In short, our mentorship is just an incredibly powerful solution for traders. Now, we have mentored thousands of traders, and Grok Trade has a stellar educational reputation and scores. And the scores are great. They're actually fantastic on our online reviews, and you can go and find those yourself if you haven't done so already. This is Scott. He says, good risk management, several 5 to 7% daily wins a couple times a week, even saw a 30% called trade. This was publicly posted, and I just snapped it. Very consistent traders. I'm happy at Grok Trade. He's from California. A couple others. This is Jana. This individual put out some public posts for everybody to see, and I just captured a couple of them. I just wanted you to see this, but I've made my goal for the day, and I'm At 14.1%, I deserve a fresh coffee. Be right back, BRB. I'm having a miracle day, all-time highs for me. I don't know how this happened. 16 of 60, meaning she won 16 out of 16, 100% for 21.9% gain, which is great for the day. I think I might cry, laugh out loud, teeny lots, and I still made my money goal, which is just fantastic. But the 301 mentorship package, to make our guidance second to none for our students, we've developed an impressively powerful curriculum to ensure rock solid development for our students, okay? First, you'll receive the one-on-one courses. Those are free. It's trading tutorials, hour and a half long. You'll go through those. Those are very, very basic and teach you about trading, okay? You watch these training videos and when the timing is best for you. You can do those on your own time. But secondly, you receive the more advanced 201 courses. Now this is a different ballgame. These are more advanced. There's six and a half hours here of me talking about how to trade. This is how to trade. We want to make sure you have one, you know everything you need to know going into your mentorship. The third, you receive the initial full immersion 3 days of training with us. And it's 3 days. And this is live training, usually done through online courses where you see our videos, much like what we're doing on this webinar here, but you can turn on your videos too. So we all see each other. It's good. But this is where you get the latest information, the best trading education that money can buy. We pull back the curtains. We hold nothing back. You just get it all. And we give you the best guarantee ever. I mean, here's the deal. As your mentors, we stay with you. We handhold you through your trading development until you make all your tuition back. And we're just with you for the long haul, if that's what you need and acquire or, require. I mean, how cool is that? We want all of our students to become trading rock stars. I mean, we actually call you guys Grok stars, Grok stars. Anyway, we support and guide you until you no longer feel like you need our help, but we're here nonetheless. Here's a couple off of Facebook. Any of you guys have Facebook accounts? So you can go to Grok Trade and follow us there and you kind of read these things yourself. But we love Facebook. And Jasmine, you can just read through that yourself. You can read through it, but it has made me into a confident, successful trader. I highly recommend Grok, and Joseph, you can read this too. Real deal. So anyway, just some Facebook love that's out there. I could board you with a ton of these. I just pulled out a few just to show that we get love. So your trading success trajectory, this is pretty cool what I'm getting ready to share with you, okay? Our success only comes by way of your success. Now, you hear people say that, but we believe this to a fault. Now, we have systems in place to help you or to help ensure that your development ramps up in the fastest rate possible. Learning is one thing, but learning quickly is another. The faster you can get into the markets to make money, the more money you'll end up making. If it takes you a year to learn how to trade, so you're missing out on a year's worth of profit. So the quicker we can ramp you up, the better. How we ramp you up is multifaceted. First, we help develop the perfect trading plan with you that will help you, okay? And we help you stick by it. So we do that first. And we talked about that earlier in the webinar. But secondly, we invite you to exclusive Grok Trade study groups. These are online, so your training never ends. You're always with us for as long as you want to be with us. And anytime we learn something new, you learn something new. When we learn new things, you learn new things. And it's a collective thing. We all can interject and add things. It's really an ecosystem that is healthy to developing savvy traders. And we've built this and we're very proud of it. And you want to be part of that ecosystem. Third, we give you software called the Trade Log. This is super cool. That pinpoints all your trading weaknesses for your mentor to help you fix. It helps see your trading mistakes. It is so powerful. This is the cat's meow when it comes to helping traders. Your trading development can only That trajectory can only increase if we can hone in on weaknesses quicker. The way we do that is through metrics. The way we get the metrics are through a trade log software that we give our students. That's how we make you rock stars. That's how we call you Grok stars, because that is what ramps you up. But all these things combined, the trading plan, our continued support through the study groups, and our trade log that we mentor you through after your mentoring, all these things combined helps us develop you into faster and into a more savvy, profitable trader. That's what we do, where you're making fewer mistakes and making money faster. So are you following me? Okay, student selection. Man, in the past, we used to take just about anybody with a heartbeat. Hey, if you want to learn to trade, we'll take you. Those times have changed. We're trying to increase our yield. So because of that, well, why? Why do we want to increase our yield? Why not just take everybody? Why do we want our students to always be successful? Because not every student is successful. The reason we do that is because we have a great name. It's a sterling name. It's a high level. I mean, we have an excellent name in the online world. And virtually every trading company out there ends up at one point or another on like scam sites or whatever. You know, knock on wood, we're just highly blessed that we never ended up on one of those. And these are good companies out there that just had somebody that felt like a victim because they didn't make $1 million overnight, and they ended up, you know, tearing down the business, whatever. For whatever reasons, they wanted to spew venom. Fortunately for us, we've never had that. We have a lot of reviews out there. We just do really well with we have a 4.5% rating. It's not a 5 out of 5 on Investo. You can just find us out there on the internet. We have stellar. So, but how we're able to do that is we select individuals who are poised to be great traders, okay? So we want to increase our yield. And so we have to be more selective in who we allow in our program. For clarity, although most of our students come ready for mentoring due to them being experienced traders already, we technically don't care if you're a newbie or a beginner. We really don't care if you're just getting started or if you already have a lot of experience. It doesn't matter, because our system, when we have in place, ramps you up through the 101s and 201s. If you don't know anything about it, we'll ramp you up. And if you're already a seasoned trader and you've been trading for a long time, our problems with you is we'll have to rewire you to get you thinking the right way, okay? But what's more important to us is not how much experience or little experience you have coming into us. It's what caliber of trader you can be. That's important to us. So we've been in business over 10 years. You heard me say that a couple of times now. We know who has the ability to be excellent traders. For us to help you, it's very important that you are one disciplined, meaning that, I mean, highly disciplined individuals and emotionally strong. Disciplined, emotionally strong. You have to be that. Emotionally strong, not easily swayed by fear and greed, okay? But you got to be financially stable. We don't want to take students who can't afford to be trading or just want to buy education on debt. You know, we don't want you going into debt for trading. That you haven't prepared yourself yet. You need to have capital to trade, and you have to be decisive. I mean, capable of pulling the trigger when there's a confluence of buy signals in front of you. You have no problem with pulling the trigger. You are a decision maker. That's very, very important. And you need to be financially savvy. That's important to us. You must be able to understand that money making constantly only comes by running your trading like a business. You have to understand that. You must ask yourself whether you have the makeup to be an excellent trader, because we want you to be that. So here's a question for you. Do you believe that you have what it takes to become a great trader? Okay. Are you disciplined? Are you emotionally strong? Are you financially secure? Are you decisive? Can you make the hard decisions when it's time to do so? If the answer is yes, please go right now to groktrade.com/wealth and fill out the form. The form is going to help us start a conversation with you to talk about our mentorship program that might or might not be something that's right for you. Okay. So we think that we have a very good thing. We just need to make sure we have a right fit. And all it is we just want you to be disciplined. If you can be one disciplined and highly disciplined and listen to what we're telling you and follow the rules, and you can be emotionally strong, meaning that you're not going to allow a string of winning trades get you too excited where you break the rules and you trade more than what you're supposed to at the time, or if you have a couple of losers in a row, that you change your trading because of that, where you let fear guide your decision making. If you can follow the rules and not allow fear and greed, then we might have a really good match with you. So just go to Grok Trade /wealth right now. Just go to that, open up a new tab, and make that happen right now. I'm getting ready to show you guys my swing trading setup. But read this. You can download a lot of great information from the internet, but you cannot download thoughtful mentoring. You have to believe that to your core. This phrase is more true than what many people can possibly understand. So a lot of people don't know this, but we don't advertise. People know what they want and they find us. The reason we offer mentoring to people today has to do with my own experience. Like I said, I had 2 trading mentors. These mentors are the reason I'm where I'm at today in my trading. It wasn't a book. It wasn't seminars. It wasn't any of those things. It was the mentors that got me to where I am today. I mean, the fact is, all the books, seminars, webinars, online content didn't help me. It gave me a lot of information, but it didn't give me a systematic methodology on how to go about and applying the information I learned. It didn't help assimilate all that information I needed to assimilate. Does that make sense? I hope you follow me on that. But my mentors helped me. For this reason, we offer mentoring. And we believe it's the best mentoring that's out there and the best mentoring experience for traders today. So I'm going to drop the link below right now. You guys, there it is. So down below, you'll see a link. You can click on that right now. Just click it and you're there. We're getting ready to wrap up. Go there now, do that. So let me talk to you. You made it to the end. Fantastic. This is my chart setup. I'm going to give you everything on this. The chart here, the lower chart's my daily. This one's my weekly. You see the W. See the W there? The D here. D for daily, W for weekly, M for monthly. So I have a daily, weekly, monthly. I always have these 3 for my day or my swing trading. My swing trading, I'm always focused on this one and this one. I'm always looking at these 2 a lot. But I want the monthly in my favor also. So let's go through my moving averages. I have an 8 exponential moving average, 8 EMA, and you can write this down, 8 EMA. I have a 20 SMA, simple moving average. The rest of them are simple. I have a 50 SMA and a 200 SMA. I took off my 100. They just didn't make sense for me. So it's an 8 EMA, 20 SMA, 50 SMA, 200 SMA. That's what I use. I do that on all charts. And then I have a MACD. My MACD is too small. You can't see it. You can see it here. A little more, you can see it here. Anyway, my MACD, here are my settings. 5, 9, and 2 are my filters for my MACD. Fast line's 5, slow line's 9, and my deviation is 2. 592, 592 for the MACD. I use candlesticks, Japanese candlesticks, as my chart of choice. That is my personal setup. That will help you. That's what I use for all my trading. So you do this now. Go to groktrade.com/wealth. Click the link below. It's right below. You don't have to go there. You just click the link. That'll help you. So I encourage you to make this step. So from this point forward, a scheduled call with us is the right thing to do. If you want to hear more about our mentorship program and what you can expect from it, this is how to get it. Do it with a phone call. I see people asking questions on costs and all that stuff. Let's find out first where you're at in your trading. If we have what you need to help you where you're at, and then we'll talk about tuition options. Okay, that's how we'll do it. And if you think that we're going to, if you believe we might be able to help you in your trading, simply click the link below. Set up a discovery call. We call them discovery calls. Discovery call, it's a cool call. You're going to get on this call and you're gonna feel right at home. It's have your cup of coffee, and it's just a relaxing call that you get to talk about your trading and where you're at. You can ask your questions about our mentoring. But for clarity, a simple phone call helps us determine whether we can help you or not. You guys know Warren Buffett? You probably know of him, right? He says the most important investment you can make is in yourself. That's a sage statement there. Do you understand what Mr. Warren Buffett is saying here? Do you believe what Warren Buffett is saying here? Think about what he's saying. Warren Buffett says to make your first investment in yourself. And there's no better investment than thoughtful mentoring, period. The wise decision is to invest in yourself in a meaningful way to strengthen your position as an educated, well-trained trader. I've given you guys a valuable solution. Yet the question still remains, will you make a decisive decision to invest in yourself? Go to groktrade.com/well. Click the link below. Old habits die hard. If you haven't already done that, listen, you guys been on these webinars before. You get all fired up, and what happens the next day? Probably nothing. Okay, I just showed you how to make money as a trader, but you might wake up tomorrow and find that nothing in your life has changed. Why? Because old habits are hard to break. The only way you can be successful is for us to find a way for you to break your bad habit, and do that right now. So the way you can break that habit is by taking the step to talk to us about mentoring. So we can help you build wealth. I can give you all the tools to break your bad habit. You have a real chance to becoming a successful trader. If you don't go to the link, you don't click the link, your chances are you're going to slide right back into your old bad habit. So everything we've done here for the last hour on this webinar will be useless to you, and all because of your bad habit. So break the bad habit, schedule a simple call with us. So you have a choice. Actually, you have two choices. One choice is to go to the website, learn more about our mentorship. Go there, fill out the form, schedule a call with us. Or number two, you can just do nothing. You can go back to your current norm where nothing changes. But which one sounds more exciting to you? You can invest in yourself to brighten your future, or potentially brighten your future through trading, or you can do nothing at all. So take it from me. You do want to invest in yourself, and you do want to brighten your future. Here's your last chance. This is it. Last slide. This is your last chance to make a wise and thoughtful decision to inquire more about our mentoring and how it might be of service to you in your trading. And more importantly, how your trading might be the very skill set to help you reach all your financial goals and dreams going into the future. I mean, take it from me. You want to invest in anything that will benefit your trading. Mentoring is the most efficient, powerful component to helping you reach your full money-making potential in the live markets as a trader, period. Click the link below. Click the link below. Actually, I'm going to close out here. I'm actually going to do something better. I'm going to close out the page, but I have a way that I can send you guys to that page. Okay. I have a video that'll play there right to the side. If it doesn't automatically play, hit play. You can watch the video as you're filling out the form. But anyway, thanks for being part of the webinar. I blabbed long enough. We'll catch you guys later. We'll see ya. Bye.